Thank you for joining us here on An Adventure in Real Estate. Today we've got Tom Lusk with Atlantic Bay. He'll be joining us today, and we're going to talk a little bit, you've heard us all share information about, if you're a buyer, getting pre-approved, pre-qualified. There's these different things that kind of get thrown out there in the discussion if you're a buyer. And so I've asked Tom to talk with us a little bit about those different designations, if you will, and maybe tell us kind of what the difference is. So Tom, thank you for being with us.
Thank you for having me. I'm just glad to be here. And yeah, that pre-qualification is it's rather confusing because depending on the lender, you're at a different level and in their system as to what you're actually qualified for, or exactly what does that mean. And we deal with it all the time with pre-qual letters, which you have to have a company, a contract for the most part. Most buyers want to see that the buyer's that the buyer is pre-qualified, or the seller wants to see that. So typically in that early stage, which we call the pre-qualified stage, is there's a phone conversation with the client, and you get the gist of what they do for a living and where they work, how long they've been there, what their income is, and how much assets they have, checking and savings account, that type thing, and you're trying to size them up as to what type of loan might work best for them. And so that's more or less a pre-qual, and at that point I will direct them to our application portal where they'll fill out more detailed information, and then I'll be able to get that, pull credit, and see what their credit scores are, and then I can actually see what they owe, and then they've told me what they make. Okay, so I'm going off that in the pre-qual stage. Okay, so that's more of a pre-qual type thing. Now when you move over to the pre-approval stage, which is the next level up, and you may not move over to that until you're going into a contract sometimes. I mean, it depends on how fast it's happening.
Right.
And but pre-approval stage comes in where I've actually seen the hard docs. I've got pay stubs, I've got W-2s, I actually have bank statements that say this is what it is, and we take the loan and we run it through what's called the automated underwriting system, and they'll hear AUS, they'll hear DU, they'll hear LP, they'll hear different things, or they'll hear GUS. They might hear Ginny, which is the government loans, and when you're doing a USDA type loan, which was really good for a first-time home buyer. It works well in Franklin County, Bedford County, because there's no restrictions on where the house is for those type loans, and you can do the 100%. So that's when you're going through the process. You get to the pre-approval, and then the actual conditional approval is all of the first two parts, plus now the loan has been reviewed by an underwriter.
Okay.
So there's where you get to what we call conditional approval, because now an underwriter has taken the documents that you've submitted, pay stubs, W-2s, bank statements, and everything else, and the application that they filled out, and the AUS results, and they've actually looked at it all, and then put the conditions on the file that they need to see in addition to what we've received.
What you've already gotten.
Like on a USDA loan for a first-time home buyer, deposits are really a big stickler. USDA is actually, because they've got income levels, and if you've got a deposit in there, it says $400. That's all it says. Well, where'd that $400 come from? Sure. Well, that was, my grandmother gave that to me for my birthday. Well, okay, then do you have a copy of the canceled check? Sure. No, she gave me 4 $100 bills. So now we're writing a letter. We're going to explain that, okay? And you're going to sign saying that's what it was, okay? And we'll take that, but you have to have that, because USDA's got that double-edged sword on income. You got qualifying income, which is what we're going to use to qualify you for the loan, and then there's household income, which is any money that's coming into that household. If your child gets Social Security for whatever reason, right, and it's obviously not going to be on the loan, but that's the income that's coming into the household, and we're going to see it on the bank statements, and we're going to have to say, where's that money coming from? Sure. Okay, and all that has to be verified, because then that household income is a level that you can't go above for a USDA loan. So there's all that.
So if I'm hearing you correctly, just to kind of step through the hierarchy, we start out kind of the pre-qualification, which is sort of the 50,000 foot view, if you will.
Yes. Yes.
And then as we come down, maybe 30,000, 25,000, that's sort of the pre-approval.
Pre-approval, where I actually have some hard docs in front of me.
And then the conditional approvals, that's where we're getting more down into the weeds, if you will. The underwriters had a chance to look at some things and maybe lay some conditions down about kind of moving forward.
That's right. We have drilled down to ground level at that point.
All right. Well, Tom, that I think that some of the confusion, I think you've cleared it up. And
well, hopefully I have. So it's like I say, it's a step in an evolution that you go through, and it begins with that first phone call.
Sure.
And depending on who you're talking to and how much experience they got, because that's at the point where I begin to underwrite the loan right then. As they start telling me things, I'll identify the elephant in the room. If this is going to be the problem, this is what we have to get around and start figuring out how we're going to do that if there is an issue. A lot of times there's not. But.
Well, Tom, thank you.
You're welcome.
And if you're out there, you're watching, you're interested in buying a home, Tom would love to talk with you there at Atlantic Bay. Give him a call, send him an email. Be glad to help you. And we're going to let that finish things up. We'll see you again on another episode and another adventure in real estate.